getting more money to help cope with the soaring consumer prices we are seeing everywhere.
Social Security benefits will rise by 8.7% next year. The remaining beneficiaries are widows, parents, spouses, or children.
And looking at the country as a whole, about 70 million retirees or disabled people, other recipients, will see a boost in their benefits.
There is a new official update on Ford stimulus checks. It's $3,500 in extra relief cash that you were actually eligible for. The 2022 holiday season will be a lean one for people who have enough on their financial plates. And just dealing with skyrocketing inflation alone, it's going to be tough. One option is to cut back on spending, another is to search for financial assistance from the government. So depending on factors like your income and household size, you might qualify for extra stimulus cash to help with bills. Millions of Americans already pay billions of dollars in state and federal taxes every year. So if you're a homeowner or a renter, you may be entitled to get some of the hard-earned money back. The Homeowners Assistance Fund, for example, is part of the American Rescue Plan. It provides up to $10 billion for every state in the country. The program was intended to help Americans avoid foreclosures and the loss of utilities during a crisis, but things have changed. Although the program is federally funded, funds are administered by the states. Residents of Arizona may apply online. You may qualify if you own and live in a home of Arizona as your primary residence, as well as if you experience financial hardship after January 21st, such as lost income or higher expenses due to the crisis. And according to officials, the Federal Homeowner Assistance Fund must be used by September 30th. The Arizona Department of Economic Security administers an emergency rental assistance program. It gives a lot of money to people with rent and utility bills and helps the Arizona renters impacted by the crisis. Now, those meeting eligibility requirements may receive up to $3,500 a month in stimulus cash. That's $3,500 of free stimulus money. The Colorado Department of Local Affairs has already used up its federal emergency rental assistance, and the cities of Boulder, Colorado, and Denver may still have funds available for you to get the money. Now, housing prices have also been on a tear since the crisis began. The underlying reasons for the dramatic rise in the cost of buying is that the nationwide prices are increasing. The further we get from the crisis, funds of some of these programs may become scarce. Now, friends, housing prices have been on a tear, and now the underlying reasons for the dramatic rise in this price is because of the Federal Reserve. Despite the biggest one-day drop since '81, a 30-year fixed-rate mortgage and home loan is still double what it was at the start of the year. The higher interest rate payments coupled with overvalued homes have caused a slump in the sale of existing homes. It's both good and bad news. Housing prices rose by 45% between January and June, and that's because 50% more than the run-up of the last housing market bubble. However, this time it doesn't look like it'll be a repeat of the 2008 housing crash. Mark Zandi, the chief economist, told reporters it doesn't look like he sees a housing collapse anytime soon because home prices will be bolstered by a couple of fundamentals: supply and improved lending practices. Furthermore, unlike the previous housing bust, both bank and household balance sheets are in a better situation because the work-from-home policies that were implemented at the beginning of the crisis allowed the migration of Americans from high-cost areas to lower-cost cities. The ultra-low mortgages already helped encourage this movement in an already limiting supply of available houses. So the increase in prices already slowed, and some of the most overvalued are now being seen as a correction. According to new data, over 90% of regional housing markets have a greater than 50% chance of housing losing value over the next year. Only 1% of the biggest housing markets have seen a drop so far. The rising prices and higher mortgage rates have cooled demand for existing homes, with homeowners priced out, which behind the deceleration prices. However, the market is still short on supply and likely to remain this way as builders cut back on this. So we're seeing that the need that President Biden doing more for the American people is a must.
Well, I certainly concur with Senator Schumer's in calling for our Republican colleagues to seriously negotiate an appropriations bill for 2023. As it stands, if we have a continuing resolution, it will be a disaster for our military personnel. First, defense spending will be about $62 billion lower than the level set out in our Senate bipartisan NDAA bill. And I'll emphasize bipartisan. In practice, this means the Defense Department will operate with at least $3 billion per month less than the level President Biden requested for fiscal year 2023.
relied on Social Security for at least 90% of their income. That's a lot of people. In 2020, through the National Institute for Retirement Security, they put that figure at close to 40% of seniors. In October, the AARP chief executive said that Social Security provides nearly all income for 25% of retirees. But a Senior Citizens League survey from this fall found it was more like 45%. So that's a lot of money. One common complaint is also about how COLA is calculated. It's determined by year-over-year changes to the CPIW. It's a bill sponsored by Representative Larson, a Democrat from Connecticut, who instead tethered a COLA to the Consumer Price Elderly Index for the elderly, which puts greater emphasis on the piece of healthcare and other goods and services that have a greater impact on older Americans. Representative Larson already sent a statement. The truth is that COLA has not kept up with inflation for years because the current formula just does not accurately reflect seniors' expenses. Mary Johnson also agrees that the CPIW is an entirely inaccurate assessment. For example, the CPIW skews heavily toward gas prices, which impacts seniors less. Because of the discrepancy, beneficiaries and benefits have lost 40% of buying power since 2000. Johnson said the Senior Citizens League favors funding for an elderly index that's as in-depth as the CPIW. And she says there's wide support in Congress for this. Wide support for more stimulus cash, that is, folks. Now, according to the most recent trustees report, Social Security trust funds are expected to run out of money by 2035, forcing major benefit cuts like tax hikes or some combination of the two. With that reality in mind, it's important to know what you can expect from 2023 COLAs. In just a dozen years before that expected day of reckoning, what happens next year and the few years after that are just going to determine whether the 2020-35 projection will end up being overly ambitious, overly conservative, or just about right for your money. Most people who already receive Social Security and Medicare have their Medicare Part B premiums directly deducted from their benefits. The standard monthly Medicare Part B premium is actually dropping to $165 in 2023. The extra $5.20 a month may not seem like much, but every bill counts. That has the potential to be especially beneficial in the future. And according to Molly Full, if your Medicare Part B premiums are deducted and your Medicare Social Security check is here, any increase in your base Medicare Part B premiums cannot be more than an increase in your Social Security benefit. That's at least according to multiple sources. Folks, here's the most important stimulus news, Social Security news, SI news, and pretty much every news but the fourth stimulus check that you guys have to know. We got a ton to discover, so keep on watching. You don't want to miss out.
Good afternoon, everyone. It's an honor to stand before you today as the incoming House Democratic leader for the 118th Congress that will convene on January 3rd, and to be joined by my two good friends, amazing colleagues and partners, the incoming House Democratic Whip, Catherine Clark, and the incoming caucus chair,